Although basically, accounting provides quantitative information which are financial in nature, but also there are qualitative characteristics of useful financial information. So hindi lang tayo sa quantity but also on the qualitative side. So what are these qualitative characteristics of the accounting information? Relevance and faithful representation are the fundamental qualitative characteristics of useful financial information. Information must be both relevant and faithfully represented if it is to be useful. Relevant information is capable of making a difference in the decisions made by users. Financial information is capable of making a difference in decisions if it has predictive value, confirmatory value, or both. So yun daw yung ibig sabihin ng relevant information. Capable of making a difference in the decision made by the user. So, what are the elements of relevance? So, we have here confirmatory role and predictive role. Financial information has a confirmatory role when it is used to confirm or correct the decision maker's earlier expectations. So, yung katangian daw ng isang financial information na sinasabing meron siyang dating prediction, for example, ay nag-predict siya ng 10 million sales, then after all the financial information were gathered and summarized, so based on that information, makikita or malalaman ng user, ng decision maker, kung na-attain ba nila yung kanyang expectation. So that is the meaning of confirmatory characteristic. Financial information has a predictive role when it is used to make predictions of, for instance, the future cash flows or income. So predictive role means its capacity to foretell what could happen in the near future or in the coming operation. Continue with the qualitative characteristics of useful financial information. Faithful representation. So dalawa yan, di ba? Relevance and faithful representation. So general purpose, financial reports represent economic phenomena in words and numbers. Element of faithful representation. Completeness. A complete depiction includes all information necessary for a user to understand the phenomenon being depicted, including all necessary descriptions and explanations. So that is completeness. So faithful representation, ibig sabihin ay i-report what it is, kung ano yung naging transaction. So, ganun ang ibig sabihin ng faithful representation. So, ito yung kanyang mga elements, dapat daw ay complete. Okay, and it should be neutral. Free from bias and freedom from error. Although, hindi naman sinasabi na ang error can be eliminated 100% accurate. So, at least, kapag sinabing freedom from error ay freedom from material error. So, the errors or omission in the description of the phenomenon and the process used to produce the reported information has been selected and applied with no errors in the process. What are the enhancing qualitative characteristics? Ibig sabihin, although meron tayong dalawang mahalagang qualitative characteristics, ang relevance at ang faithful representation, may mga qualitative characteristics pa rin na mas nakakatulong o nakakapagpaganda sa dalawang mahalagang qualitative characteristics natin na ang relevance at ang faithful representation. So what are these? We have comparability. Information about a reporting entity is more useful if it can be compared with similar information about other entities and with similar information about the same entity for another period or another date. So, comparability means yung kakayahan ng information para magkaroon ng paghahambing within the organization. So, titingnan mo from year 1 to year 5 or similar information within the organization, or pwede nating i-compare ang information ng similar industries. Like, pwede nating tingnan ang financial information ng lahat ng state universities and colleges. Or pwede nating bigyan ng comparability ang mga financial information ng lahat ng Divine Word colleges. So, ganun yung kakayahan ng information kung ito ay may katangian na sa kanya na comparability. Then, verifiability. Verifiability means that different knowledgeable and independent observers could reach consensus. So, verifiability means pwede mong mahanap yung ebidensya. That's verifiability. Timeliness means that information is available to decision makers in time to be capable of influencing their decisions. And understandability, classifying, characterizing, and presenting information clearly and concisely makes it understandable. Okay, so punta naman tayo sa underlying assumptions. Underlying assumption is going concern. The financial statements are normally prepared on the assumption that an enterprise is a going concern and will continue in operation for the foreseeable future. Hence, it is assumed that the enterprise has neither the intention nor the need to liquidate or curtail materially the scale of its operations. This assumption underlies the depreciation of assets over their useful lives. If an entity expects to liquidate in the near future, its assets are valued at their worth at liquidation rather than original costs. The framework states that the going concern assumption is an underlying assumption. Thus, the financial statements presume that an entity will continue in operation indefinitely, or if that presumption is not valid, disclosure and a different basis of reporting are required. So, to make it very understandable what a going concern underlying assumption is, so sinasabi na sa assumption na ito na pinapalagay ng isang business entity ay patuloy lang sa kanyang operation hanggat walang mga dahilan na nagmamanifest na ito ay titigil na sa kanyang operation. At dahil sa assumption na ito, ang mga assets ay nire-record natin at historical cost dahil nga ang ating assumption ay tuloy-tuloy lang ang operation ng isang business entity. What are the elements of financial statement? So, meron tayong dalawang group ng elements. Yung first group ng elements ay directly related to the measurement of financial position. So, pag sinabi natin financial position, we are referring to our balance sheet. So, assets, liabilities, and equity. So, yan yung kanyang element. Then, the another group are the elements directly related to the measurement of performance. And so, we are referring to the income statement. And the elements here are the income and expenses. Okay, so those are the elements of statements. So, what are these elements in the financial position? And let us visit the basic definition of these elements in the financial position. So we have the asset, liability, and equity. So asset is a present economic resource controlled. So these are resource controlled by the entity as a result of past events. An economic resource is a right that has the potential to produce economic benefits. So yun daw ang katangian ng assets. Dapat ay may control. So pag sinabi nating may control ang entity, meron siyang title to that particular asset. So kung meron siyang equipment, dapat may title siya sa equipment. Kung meron siyang kung ang asset ay land, dapat meron siyang title sa land. And liability is a present obligation of the entity to transfer an economic resource as a result of past event. So, nautang na. Tapos na siyang nautang. So, naging present obligation. Equity, on the other hand, is the residual interest in the asset of the enterprise. So, residual interest in the asset of the enterprise. Residual meaning natira. So, pag natanggal yung utang ng yung liability, pag tinanggal natin sa assets, total assets, ang matitira sa atin ay ang equity or ang capital ng owner after deducting all its liabilities. Equity may pertain to any of the following depending on the form of business organization. So, for the sole proprietorship, there is only one equity account. We call it the capital account. Okay, so De La Cruz Capital. And for the partnership, each owner, so kung ilan silang partner, there will be a separate account for each partner. And for the corporation, the stockholders' equity is one equity for everybody, but it will be consisting of the share capital of all the stockholders, the retained earnings or the accumulated savings, and everything in the reserves. So that is how the different equity account for the different kinds of business organization, forms of business organization. For the financial performance, we have income and expenses. Income is increases in assets or decreases in liabilities that result in increases in equity other than those relating to contributions from holders of equity claims. Increases in assets, example, debit cash, credit sales. So, nag-increase ang asset. Or decrease in liability. So, example, we debit an earned revenue and we credit liability. So, that is an example of decrease in liability. We recognize our earned revenue from the advance payment from customer. Or, sabi dito, that result in increases in equity. So, itong dalawang ito ay dapat nag-result sa increase in equity. Other than those relating to contributions from, so, yung additional investment ay hindi natin tinitreat na income. But, nag-increase ng equity pero hindi siya considered as income. Expenses, on the other hand, are decreases in assets. So, we debit expense and we credit cash. So, nag-decrease ang asset natin. Or increase in liability, we debit utilities and credit utilities payable. So, for the expenses that are not yet paid but already incurred, that result in decreases in equity. But decreases in equity like those withdrawals are not considered as expense. So that is why withdrawals by the owner is not an expense but a direct deduction from the capital of the owner. Okay, so what are the typical account title used? So before that, we will have the classification of assets. Dalawa ang classification natin, no? The current asset and the non-current assets. So current asset we consider is current if it expects to realize the asset or intends to sell or consume in the normal operating cycle. So, ang normal operating cycle natin ay usually 1 year. Pero, may mga entities na ang kanilang operating cycle ay more than 1 year. Okay? Katulad nung mga entities na nagpapatanda ng kanilang mga alak or wine. So, it is more than 1 year. So, kaya hindi natin sinasabi that the normal operating cycle is always equivalent to 1 year. Okay, another criteria why we should classify an asset as current is it holds the asset primarily for the purpose of trading. Okay. It expects to realize the asset within the 12 months period after the end of the reporting period. So, 12 months ang binigay sa atin dito, no? But we have to consider the normal operating cycle of other kinds of firm or entities. The asset is cash or cash equivalent unless it is restricted from being exchanged or used to settle a liability for at least 12 months after the end of the reporting period. So, those are the qualification of current. Pag non-current naman, operating cycle is the time between the acquisition of materials entering into a process and its realization in cash or an instrument that is ready, convertible to cash. So, these are the usual account of asset under the current asset classification. Cash is any medium of exchange that a bank will accept for deposit at face value. It includes coins, currency, checks, money orders, bank deposits, and drafts. Cash equivalents. These are short-term, highly liquid investments that are readily convertible to known amounts of cash and which are subject to an insignificant risk of changes in value. So, short-term. Notes receivable. A note receivable is a written pledge that the customer will pay the business a fixed amount of money on a certain date. Accounts receivable, similar to notes receivable. These are claims against customers arising from sale of services or goods on credit. This type of receivables offers less security than a promissory note. Inventories are assets which are 1. Held for sale in the ordinary course of business, in the process of production, for such sale, or in the form of materials or supplies to be consumed in the production process or in the rendering of services. Prepaid expenses are expenses paid in advance. For the non-current assets, property and equipment. These are tangible assets that are held by an enterprise for use in the production or supply of goods or services, so tangible assets, or for rental to others or for administrative purposes, and which are expected to use during more than one period. Included are land, building, machinery, and other equipment, furniture and fixture, motor vehicles, and equipment. So these are the usual kind of property, plant, and equipment account. Then the accumulated depreciation is a contra account that contains the sum of the periodic charges in depreciation. So the balance is deducted from the cost of the related asset to obtain the book value. Then we have the intangible assets. These are identifiable non-monetary assets without physical substance, such as which are held for use in the production or supply of goods or services, for rental to others, or for administrative purposes. This includes goodwill, patents, copyrights, licenses, franchises, trademarks, brand names, secret processes, subscription list, and non-completion competition agreement. So those are examples of intangible assets. So let us move to our liabilities. An entity shall classify as a liability as current. So meron din tayong current liability and non-current. Current when it expects to settle the liability in the normal operating cycle. It holds the liability primarily for the purpose of trading. The liability is due to be settled within the 12 months after the end of the reporting period. And the entity does not have an unconditional right to defer settlement of the liability for at least 12 months after the end of the reporting period. So these are the quality or the description fitted for the current liability. Example ng ating mga current liabilities: accounts payable, goods or services are accepted by the buyer, and the buyer agrees to pay them in the near future. Notes payable, similar to accounts payable. The business entity is the maker of the note. That is, the business entity is the party who promises to pay the other party a specified amount of money on a specified future date. Then we have the accrued liabilities, amounts owed to others for unpaid expenses. Unearned revenues are revenues collected in advance. So, current portion of long-term debt, the portions of mortgage notes, bonds, and other long-term indebtedness which are to be paid within 1 year from the balance sheet date. Then the non-current liabilities, we have mortgage payable. It records long-term debt of the business entity for which the business entity has pledged certain assets as security to the creditor. In the event that the debt payments are not made, the creditor can foreclose or cause the mortgage asset to be sold to enable the entity to settle the claim. That is mortgage payable. Bonds payable, business organization often obtain substantial sums of money from lenders to finance the acquisition of equipment and other needed assets. They obtain these funds by issuing bonds, and the bond is a contract between the issuer and the lender, specifying the terms of repayment and the interest to be charged. And our owner's equity, we have the capital, the withdrawals, and the income summary. So the capital account is used to record the original and additional investments of the owner of the business entity. it is increased by the amount of profit earned during the year or is decreased by a loss. Withdrawals are when the owner of a business entity withdraws cash or other assets such are recorded in a drawing or withdrawal account rather than directly reducing the owner's equity account. And income summary is a temporary account used at the end of the accounting period to close income and expenses. This account shows the profit or loss for the period before closing to the capital account. Let's move on to our income statement accounts, the income and expenses accounts. For the income accounts, usually when the business is a service type, so we call it service income. And when the entity is a merchandising type, we use the sales account. And we have various expenses account like the cost of sales, salaries or wages, telecommunications, electricity, fuel, and water expenses, supplies expense, rent expense, insurance expense, depreciation expense, uncollectible account expense, and interest expense. So, the accounting equation states that assets equals liabilities plus owner's equity. So this is the most basic tool of accounting equation. This equation represents or presents the resources controlled by the enterprise, the present obligation of the enterprise, and the residual interest in the business. So in our equation, assets or the total assets is the total of your liabilities plus owner's equity. So, ang tinatawag nating residual interest is the owner's equity. After deducting the total liabilities from your total assets, then what is left is your owner's equity. The account, debits and credits, and the double entry system. So, the account is the basic summary device of accounting. A separate account is maintained for its element that appears in the balance sheet, assets, liabilities, and equity. And in the income statement, the income and expenses, the simplest form of account is known as the T account. Accounting is based on a double entry system, which means that the dual effect of a business transaction is recorded. A debit entry must have a corresponding credit side entry. For every transaction, there must be one or more accounts debited and one or more accounts credited. Each transaction affects at least two accounts. An account is debited when an amount is entered on the left side of the account and credited when an amount is entered on the right side.